Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Questions swirl over Venezuela's leadership and Donald Trump's plan to revive the country's oil industry, a years-long effort that could cost upwards of $100 billion. Oil swings as traders weigh the impact of Nicolas Maduro's capture by U.S. forces, with President Trump saying U.S. companies will spend billions of dollars to rebuild Venezuela's energy infrastructure. Iran's supreme leader vows to crack down as deadly unrest drags on. President Trump suggests the U.S. is ready to intervene if more protesters die during demonstrations. Well, it's just gone 9 a.m. across the Emirates. I'm Amar Bashir in Dubai, back in the office again. Happy New Year to everybody who's tuning in this morning. Well, the news gods have certainly delivered over the weekend. We're going to be delving in a lot into what has gone down in Venezuela over the course of the weekend and obviously the impact that this is having on markets. Take a look, though, largely being brushed off, especially by the Asia-Pacific Index, MSCI Asia-Pacific, up 1.5% already. Very strong day for the tech sector, the likes of Samsung and others leading the charge this morning. So putting some of the concerns or questions around Venezuela to the side, S&P futures leaning towards the green. We had a bit of a roller coaster session the first day of the year, ending moderately positive. Today also leaning towards positive as well, up about 15 basis points. But of course, after a very strong year last year, ending north of 17% higher for 2025. Are we going to get a repeat in 2026? One of the questions we're going to be putting to our markets analysts later on the show. And then oil. Obviously, we walked in this morning and everyone wanted to see what the reaction in oil would be after the Venezuela developments. And take a look today. We're actually trading slightly weaker, down 0.4%. Brent trading at a $60 handle. And again, questions here about how quickly Venezuela can actually be ramping up production in the coming years. And set aside, of course, all of the questions about leadership, who exactly is going to lead, and how quickly it's going to take to get that oil infrastructure back up and running again. So again, questions we'll put to our oil guest in this show. And then gold, given the geopolitical uncertainty in the world, no surprise this morning, trading north of $4,400, 1.7% firmer on the session. Now, I mentioned something about Venezuela oil production. Just take a look back at how Venezuela oil production has transpired over the course of the last decade. It wasn't that long ago, maybe around 20 years ago or so, they were producing close to 3 million barrels a day. That all changed around the time of Nicolas Maduro, and you can see beginning from 2019 onwards have been producing sub 1 million barrels per day. Now the production is around 900,000, 1 million barrels a day. To put that in context, they only account for about 1% of global oil supplies as things stand right now. But again, questions about the future, just to give you a bit of context about Venezuela's oil production. Okay, let's move on and check in on how markets in Asia are faring this morning. Min Min Lo is in Hong Kong for us. And Min Min, I was just talking about the fact that most of these markets seem to be parking aside some of the geopolitical questions around Venezuela.
That's right. Venezuela is the top news in the region, but markets seem to be brushing that off. We are seeing green across most of the screen here. Hang Seng Tech was gaining earlier in the morning. It looks like a bit of profit taking that's going on because we did see a strong gain last Friday. But look at the rest of the region, right? Kospi hitting another record high on the back of jumps in the likes of Samsung and SK Hynix. Samsung is one company that just released another new super-sized color-rich TV, really cementing its position as the leading TV maker, and the Nikkei as well gaining on AI-related gains and the weaker yen as well. And if you flip the board, we can take a look at some of the tech stocks in particular. TSMC, for example, seeing a 5% pop here after it got a 35% boost on its price target from Goldman Sachs. SMIC as well, huge gains there after the Chinese National Chip Fund had raised its stake on that company from less than 5% to now over 9%. That's leading to a broad-based rally across tech stocks here in Asia. Kuaishou as well, 10% gain. This is because of its Kling app, an AI app that is really popular overseas, the #1 graphics and design app in South Korea and top 10 in the US as well. And Samsung, I was talking about it earlier, the launch of the new TV here, 6% gain. So overall here in Asia, it's all about tech. We still continue to see that theme playing out early in 2026.
Min Min Lo in Hong Kong, thank you so much. Now, Venezuela's acting president says she is inviting the U.S. to work with her country after an American operation to capture President Nicolas Maduro. The U.S. swooped into Caracas over the weekend, seizing Maduro and flying him to New York to face drugs and weapons charges. President Trump earlier said the U.S. plans to, quote, run Venezuela with elections due eventually.
We're going to run everything. We're going to run it, fix it. We'll have elections at the right time. But the main thing you have to fix is a broken country.
Joining me now is Mário Braga, Geopolitical Analyst at RANE. Good to have you with us on the show this morning. I'm going to start off by asking you what exactly you think the Trump administration's plan is for Venezuela. And quite simply, the fact that they're willing to work with Maduro's then vice president, now acting president, Delcy Rodriguez. What does that tell you about the Trump administration's plans for Venezuela?
Good morning, and thanks for having me. Well, from the statements from President Donald Trump, it seems that the U.S. government is taking a rather, again, transactional approach to the situation in Venezuela and focusing much more on the energy sector and the opportunities that the country's oil reserves can provide, rather than prioritizing instead the transition to democracy. This was what he hinted at the first press conference on Saturday, and now we see his statements at the Air Force One again, prioritizing the reconstruction of the oil and gas infrastructure, the opportunities for U.S. energy companies in Venezuela, while just saying that at some point in the future there may be elections. So when we look at this more transactional approach, is again the focus of the U.S. also exerting influence in the Western Hemisphere.
Yeah, at the same time, Maduro was the figurehead of the regime, but the rest of the regime, and here I'm talking about civil servants, I'm talking about security forces, military, paramilitary, the 120,000 strong FANB group. How likely is it that they're going to be loyal to the acting president and in turn accepting of the fact that now there's a new sheriff in town, and that is the United States?
Yeah, that would be the tricky balance that the now President Delcy Rodriguez will need to manage, because the way we see the situation evolving is that the strikes in Venezuela and Caracas and also the capture of Maduro gives a very clear sign to the authorities in Caracas that if they do not cooperate with Washington, the White House is willing to adopt escalatory measures to ensure U.S. interests prevail. So that, as an external factor, is, so to speak, an incentive. And when we look from the domestic side within Venezuela, within the elites, both from the government and the military, they also have interest in the maintenance of the regime. Because if the regime collapses, if either the U.S. removes Delcy or if there is an election and the opposition wins, you have a large number of both government and military high-ranking officials that could face trials either in Venezuela and in the U.S., just like Maduro will likely do. He will be before court today. So that's why for them is also interesting that there is some sort of cooperation.
Yeah. Well, President Trump has ruled out committing U.S. troops on the ground. But what if the Venezuelan military try to take over the government? Is there a worst-case scenario where actually the U.S. does get embroiled in a bigger war in Venezuela?
Yeah, the situation at the moment is very uncertain. What we are seeing are just the first steps. And from now, what we can see is Delcy Rodriguez saying she's willing to cooperate, is Trump threatening to carry out a second round of strikes if Caracas does not cooperate. But of course, there is a lot of elite infighting within Venezuela. There is the risk that hardliners, both within the government or within the armed forces, can seek to oust her, to overthrow her, and take hold of the government. That can escalate, for example, even to a state of internal armed conflict. As you mentioned before, in addition to the armed forces and the public security forces, Venezuela has paramilitary forces. There are Colombian groups within the Venezuelan territory operating near the border. So in this uncertain scenario, we cannot rule out a situation in which there is an armed conflict, there is high protest activity, and there is a fight for power within the Venezuelan government.
Yeah. When most people think of U.S. foreign policy in the Western Hemisphere and Latin America, they refer to the Monroe Doctrine. The last couple of days, I've been reading about the Donroe Doctrine, which is obviously reference to Donald Trump and the corollary to that, if you fast forward to today, i.e. to suggest that the Trump administration is less about ideology and more about pragmatism. How do you think other countries in Latin America are watching these events unfold? And are we looking at potentially a new world order?
Yeah, the precedent the operation in Caracas sets is very worrisome for many countries in Latin America, especially when we see the developments since Trump took office last year, in the sense that he has designated many criminal organizations in the region as foreign terrorist organizations. He has declared this state of armed conflict against drug trafficking. So he has declared fentanyl a weapon of mass destruction. So a lot of legal ground has been set. So he can, if he wishes, if the Trump administration wishes, to do similar actions in other countries. He has already threatened to do so in Colombia. Now, just minutes ago in the Air Force One, he mentioned both Colombia and Mexico. Mexico, we know, is the main source of fentanyl, with the precursors coming from China. So all of this can be a reason for the Trump administration to carry out military operations in other countries violating their sovereignty. And when we think more broadly about a new world order, of course, it's very early days, but this indicates that the U.S. is willing to exert dominion on the Western Hemisphere as its sphere of influence, suggesting it would be comfortable with other superpowers retaining dominion on other areas of influence. So we can think about Russia in Asia and Eastern Europe, and China in Asia as well.
Yeah, other authoritarian regimes definitely taking note. Mário Braga, geopolitical analyst at RANE, thank you so much for joining Horizons today. Well, Denmark's Prime Minister has urged President Trump to stop threatening to take control of Greenland for defense purposes. Mette Frederiksen has said the U.S. has no right to annex any of the 3 countries of the Kingdom of Denmark. President Trump has argued that U.S. control of Greenland is necessary for national security, citing the presence of Russian and Chinese ships. And coming up, we speak to Wealthbrix Capital Partners on their outlook for global markets and fixed income for 2026. This is Bloomberg. Asian equities climbed to a record as investors added to bets on technology shares and looked past geopolitical triggers like Venezuela. Joining us now is Wealthbrix Capital Partners Head of Fixed Income, Amar Bashir. Really good to have you with us on the show. You're the first guest I speak to about the outlook for 2026, so there's a lot of ground I want to cover with you. I actually just want to start with, I know your focus is on fixed income, but I actually want to just start with the equities performance last year and the fact that despite a year of geopolitical shocks, of wars, of uncertainty, of tariffs, of so many headlines, you still saw these global stock indices end up around 20% higher globally. Can we get a repeat of that, do you think, in 2026?
So maybe not a full repeat, but we are optimistic for risk assets again this year. The basic premise of what drove the rally last year is really central bank monetary easing. We've come from a period of high inflation, and as inflation has come back down towards targets in many of these many developed markets as well as emerging markets, there's been finally room for these higher rates to come down. That has given a boost to equities and risk assets in general.
Yeah. When I look at what's priced in for the year out of the Fed, it's only about 57 basis points. Do you think there's room for a surprise either way here? I mean, people talk about the Fed chair replacement being quite dovish. 57 basis points doesn't sound like an extremely dovish Fed chair coming in, does it?
Yes, I think you have to first look at what the Fed dots showed in December. They indicated only one rate cut, so the market is already pricing in more than the Fed has sort of relayed to the markets. That being said, we are more constructive in this area as well. Inflation has been improving, slowly but improving, but it's really the labor market that I think will be the main driver. We got some good insight into how the Fed is looking at it at the December meeting when Fed Chair Powell stated that the payroll prints were probably overstated by about 60,000 a month. So I think what we will see after the noise of the shutdown, we should see the unemployment rate continue to tick higher, and that will drive the Fed to potentially cut maybe 3, potentially as much as 4 times this year.
Okay, would you be long U.S. fixed income here then?
Yes, we prefer to express that via steepener.
Yeah.
So the steepener is one of the core views we have for 2026. Similar themes to last year. All the main drivers remain in place. So yes, we would be long fixed income in general, but we like to express that front-end move more via steepeners.
Yeah, if you look at the global fixed income performance last year, again, another thing that caught my attention is that U.S. 10-year actually rallied throughout the course of the year. We ended up lower than where we started. Not the case for countries like Japan. Obviously, JGPs, you had a huge re-rating, no longer the widowmaker for many who are in that trade. For gilts, for France, and one of the common themes in those countries was the additional fiscal premium that bond investors are pricing in. Why are they being so selective about the countries where that fiscal premium is being priced in? I.e., why did we not get more of it in the U.S., which, as we know, is still running these very high deficits?
That's a good question. I think it's more, if you look at the comparison, the deterioration was significantly worse in other countries. So Japan has seen, Prime Minister Takeichi come into place and add more fiscal stimulus when inflation was already quite high. Their debt to GDP dynamics were already bad and are getting worse. France as well, the political risk there. So it's just in terms of in terms of relatively, U.S. looked actually better.
Yeah. Okay. Interesting. So let me just bring it back to where the risk could come from this year. I mean, we're walking in. It is the first proper trading day of the year. We hear about Venezuela, and yet you look at the market performance today, Asia Pacific completely brushing it off. If it's not geopolitical, where could the risk come from?
So we mentioned that we're quite bearish on the labor market, and we expect more monetary easing across the globe, really. But the risk could be that we see a reacceleration of growth and inflation in the first half. In the U.S., fiscal policy turns accommodative in the first half. There is really a strong impetus from household sectors, from the boost in equity markets. So if you do see an acceleration where potentially the Fed does not deliver the rate cuts priced, or we have a hawkish Fed selection, which I don't think will happen, then the base case of the central bank easing, what's really been driving the markets, that could really change the narrative, and that could be negative for risk assets.
Okay. Base case, though, can EM assets also perform well in 2026?
I believe so. I think the view that we have on the dollar, which is our second high conviction call, again, a continuation of the moves in 2025. We see further dollar weakness. That is a massive tailwind for emerging markets. So these EM central banks who have not been able to cut rates in previous dollar crises, etc., now are able to cut rates. They have high real yields. There's a very big scope for EMFX outperformance. Also, if you look at some of the commodity currencies, we like the Chilean peso, the South African rand. They've really lagged what we've seen in terms of the move in precious metals.
Yeah.
So we see a better year for EMFX, and that in itself will drive EM equities and EM local rates.
Amar, always good to chat to you. Thank you so much for coming on our show. For the first conversation around the global outlook, Amar Bashir, head of fixed income at Wealthbrix Capital Partners. Well, coming up, Iran's supreme leader is vowing to crack down on protests as deadly unrest drags on. We have the details next. This is Bloomberg. Iran's supreme leader has threatened a crackdown on rioters amid unrest sparked by a collapse in the local currency. Ayatollah Ali Khamenei says that while the grievances behind the protests were justified, he also blames external forces for rising food prices and currency volatility. Let's bring in Onur Ant, Bloomberg's managing editor for Middle East and North Africa. So watching the developments in Iran very closely, how serious are these demonstrations and how much of a threat do they actually constitute to Iranian leadership?
Well, the demonstrations so far have been somewhat limited compared to what we have seen last in 2022 following the killing of a young woman that sparked outrage across the country. Yeah. Having said that, this time around they are mainly fueled by anger over economic conditions. The Iranian currency lost just about 40% based on the exchange rate that people actually have access to, civilians have access to. So, and it's talking inflation, and there's very limited room for maneuver for the Iranian government, given the falling revenues, oil revenues, as a result of U.S. sanctions and as a result of where oil prices are. So, given the fact that Iranian authorities have now very limited room to intervene and provide fiscal support for people most affected by the cost of life crisis, there is a chance that we will see a continuation of these demonstrations, and they have already proved to be quite deadly so far. At least 8 people have been killed, but probably more, because there's very limited amount of information coming out of Iran on the protests. So there is a risk of continuation.
And not just that, but also surely the Iranian regime would have been watching what happens in Venezuela over the course of the weekend, the forced removal of Maduro. How do you think they are assessing whether this could have knock-on effects to Iran as well, a more aggressive interventionist approach by the U.S. and obviously Israel too?
Absolutely. Both what happened in Venezuela and just prior to that, Trump's own threats. We have seen Iranian officials responding to those with varying degrees of anger. But so far, including the Supreme Leader Khamenei, have been quite careful not to respond back to Trump, using his name, because there is a fine balance they need to strike in this equation. Just 6 months ago, we've seen U.S. bombers attack Iran's most prized military and nuclear assets with impunity, and they have been threatening to do more. So yes, Iranian authorities seem to be worried, but they have been very careful in terms of how they responded to Trump and his various threats. They've been pushing back. They've been accusing some of the protesters of protests of being stoked by foreign powers, but we didn't see an aggressive pushback so far.
Okay. Onur, thank you so much. Onur Ant, Bloomberg's managing editor for Middle East and North Africa. Thank you. Well, coming up, oil prices swing as traders weigh Venezuela's future after Maduro's ousting. We'll speak to Carole Nakhle, CEO of Crystol Energy, next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Questions swirl over Venezuela's leadership and Donald Trump's plan to revive the country's oil industry, a years-long effort that could cost upwards of $100 billion. Oil swings as traders weigh the impact of Nicolas Maduro's capture by U.S. forces, with President Trump saying U.S. companies will spend billions of dollars to rebuild Venezuela's energy infrastructure. Iran's supreme leader vows to crack down as deadly unrest drags on. President Trump suggests the U.S. is ready to intervene if more protesters die during demonstrations. Well, it's just gone 9:30 a.m. across the Emirates. I'm Joanna Bersachi in Dubai. Happy New Year. If you're just joining the program, we've spent a good chunk of the program talking about both the developments in Venezuela and also global outlook for markets this year after what was actually quite a stellar year for global stock market indices. Today, walking in more strength coming out of these Asia-Pacific indices. MSCI Asia-Pacific up 1.5% already. Some of those tech names in the space doing quite well. Min will walk us through that shortly. S&P futures also leaning towards the green as well after more moderately positive session the first day of the year last week, up about 10 basis points or so. But of course, drawing on for more than gains of 17% for 2025. And then oil. Take a look at the energy complex this morning. Lots of questions about what all of the developments in Venezuela were going to mean for Venezuela's oil infrastructure and future production. Today, the reaction is mildly negative on the market. Brent is trading at a $60 handle. 60.5 is where we're at, about 0.5% weaker. Also, don't forget, we did have an OPEC Plus meeting over the course of the weekend that was sort of brushed aside by the news flow, but essentially they're not making any changes to production over the next couple of months. We're going to be speaking about that shortly with our guest, Carole Nakhle. And take a look at gold this morning. Generally, what you see is whenever you see heightened geopolitical uncertainty, money goes into gold and silver. That is the case this morning. Gold is through 4,400 once again, 1.8% firmer. Now, speaking about energy, let me just show you historical production levels coming out of Venezuela, just to encapsulate the fact that at one point in history, Venezuela was producing closer to 3.5 million, even 4 million barrels a day. But for the last 5-6 years or so, they've been producing sub 1 million barrels a day, have climbed in the last few years, but still around 900,000 barrels a day. That's around 1% of global oil supply. So as it stands now, not major contributor, but could be if infrastructure gets up and running in the next few years. And of course, that is one of the big questions for anyone involved in that space. All right, let's also check in on how markets in Asia are faring. Min Lo is in Hong Kong for us. Min, walk us through it.
Hey, Jumana. So Asian markets are largely brushing off the news from Venezuela. We are seeing a lot of tech-led gains in Asia. As you said, the MSCI Asia Pacific up by 1.5% here. But there are some corners of the market that are reacting to the news. And here you can see some of the South Korean and Japanese defense names here gaining by to the tune of about 9% here for Mitsubishi Heavy Industries. We're also tracking some of the commodities prices and some of the related stocks in Asia as well, because as you said, gold continuing to see that upward climb, the safe haven play there, and aluminum as well resurging to a 2022 high over supply concerns. Copper once again heading towards another record over concerns that maybe Trump could revisit those tariffs on copper. So we are seeing some of these mining stocks in Asia also gaining by about 3% or so.
Min, thank you so much. Min Lo in Hong Kong. Well, oil prices fluctuate as traders weigh the fallout from the U.S. capture of Venezuelan President Nicolas Maduro. Trump has said the U.S. plans to run the country, including its petroleum reserves.
We need total access. We need access to the oil and to other things in their country that allow us to rebuild their country.
Joining us now is a lady who knows a lot about the energy industry, Carole Nakhle, CEO of Crystol Energy. Happy New Year to you, Carole. Really good to have you with us on the show. Let's start with the breaking news over the weekend, the situation in Venezuela, the fact that the Trump administration is being pretty transparent about the fact that, they're eyeing the oil industry in Venezuela strategically. My question is, how quickly can Venezuela actually ramp up production again? We just showed a chart showing that Venezuela actually right now are producing sub 1 million barrels a day. How long is it going to take before they can get back to 3 million plus again?
Well, I'm not going to say that they will never reach back that level, because we had Iraq, for instance. They went through, not similar, but at least, a sharp decline, and then they managed to recover back to their peak. But that took a while. That took a few years. But in the case of Venezuela, there are so many unknowns today. And also the decline in oil production in Venezuela did not happen because of sanctions or because of below ground factor. The main problems for Venezuela, and that's why I've been fascinating in this country, is how governments can really mess up their natural resources. And actually, the problems in Venezuela started when Chavez came to power, and he changed all these policies and the contracts. And that's why you had companies such as ExxonMobil, the American majors. They took Venezuela to international arbitration because they introduced all these aggressive terms and almost mini nationalization of the industry again after opening up to the private sector. So you had this massive structural decline in the capacity in the country, the expertise of PDVSA, because again, Chavez fired almost half of the employees at some point when they went on strike of PDVSA. There are structural fundamental problems. The sharp decline that we have seen has not been seen in Venezuela's history. So to go back to the levels that you're talking about, the 3.7 million, it will take a while, but we could see some few hundred thousands coming back to the markets if the sanctions are relieved, but nothing major to move the market in a different direction unless we have disruptions or something else happening elsewhere.
But of course, they're sitting on a huge amount of oil reserves. And I was reading a statistic over the weekend, and this was based on an article that our colleague Javier Blas was writing about. Combined oil reserves from Venezuela, Guyana, and the U.S. could give the U.S. about 30% of global oil reserves if consolidated under its influence. I mean, surely as an energy analyst, you have to think about the fact that the U.S. is looking to actively grow its clouds and exercise that clout over global oil markets at a time where you could argue that OPEC plus influence is diminishing. OPEC.
Well, yes and no. I can see the argument and the logic in that rationale. But again, it's not just what you have below ground. It's what you are doing above ground that is more important. For me, the main influence, of course, oil plays a role. But what the main consequence of the U.S. actions in Venezuela is already raising so many questions, including how are they going to have access to those reserves? Because constitutionally, only in the U.S. and maybe a few parts of Canada, that is part of private ownership. So it all depends on the contractual arrangements that are going to be in place in Venezuela and whether we are going to see the legal changes, the constitutional changes. But the main point for me today, and that's what I'm observing, is the geopolitical risk that is creating and the message that the U.S. may be sending to other important players around, because it's not a common action of a power such as the U.S. to directly intervene. We have been accustomed to sanctions, but a direct intervention by a super major power like the U.S. is watched closely globally. And are the Americans sending a message to other sanctioned countries, primarily Russia and Iran? That is the key question that we should focus on today.
Do you think there needs to be more geopolitical premium priced in to where oil is trading today?
I cannot say whether it should be more or less, because if I look at the fundamentals at the current situation where we are all expecting a surplus this year, everything else being the same, and of course, if more Venezuelan oil comes to the market and no sanctions, further enforcement applied on Iran, on Russia, let's wait and see. But given the current situation, I don't think that's it should be more priced in, but definitely we should keep an eye on what the consequences are going to be from the actions in Venezuela, not only in Venezuela, but also elsewhere. But at the moment, it's keeping the market, if you want, stable, but it's kind of nervous stability. And that's why we heard OPEC talking about cautiously observing the market before changing their course of action.
Yeah, and if you look back at 2025, it was a very challenging year for the oil complex, ending the year down between 17% and 18%, something like that. And I just wonder whether at these levels, and you've got Brent trading around $60, whether that is fully accounting for the extra supply, the surplus of supply versus demand that's to come in 2026, or whether you think there could still be potential for further downside.
I think there could be potential for further downside, assuming there are no further actions on Iran and there are no escalations with Russia, because the situation in Venezuela already takes away, especially if the sanctions are relieved and the blockade is removed and the sanctioned barrels from Venezuela come back to the market. Because when you have a situation of a market which is already predicted to be in surplus, then every additional barrel will put a downward pressure on prices. But let's see what the OPEC plus producers are going to do. I don't think if prices are going to collapse, which I doubt they will just keep on watching and not alter their strategy. They are there. There are still influential players in the market. But at the moment, I think it's wise enough from their side and like everybody else to wait and see how the situation is going to unfold, because it caught everyone by surprise.
Carole, thank you so much. Always a pleasure to chat to you. Carole Nakhle, CEO of Crystol Energy. Thanks so much. Now for a look at some of the other stories you're following today. Saudi Arabia has called for Yemen's southern factions to enter into talks in Riyadh as clashes continue between Saudi-backed forces and separatist rivals backed by the UAE. In a foreign ministry statement, Saudi Arabia says the upcoming conference aims to find just solutions. The UAE has denied Saudi allegations that it's directing separatist groups in the region in an attempt to undermine security. Britain and France have carried out a joint airstrike in central Syria on an underground facility. They say the strikes targeted members of the Islamic State group who are suspected to have stored weapons and explosives in the mountains just north of Syria's historic town of Palmyra. UK Defence Secretary John Healey says the operation was aimed at preventing the resurgence of the group. Axios is reporting senior Syrian and Israeli officials will meet today in Paris to resume negotiations on a new security agreement. The talks are expected to take place over 2 days, with Syria's foreign minister participating opposite a new group of Israeli negotiators. The goal is said to be a security pact that includes the demilitarization of southern Syria and Israeli withdrawal from parts of Syria it occupied. And coming up, we'll talk to Amer Khansaheb, CEO of Union Properties, the best performing stock on the Dubai Exchange in 2025. That's next. This is Bloomberg. Union Properties has been the best performing stock on the Dubai Exchange in 2025. The developer stock gained more than 100% after already rising about 40% in 2024. Amer Khansaheb, Union Properties CEO and board member, joins us now. So you have, I guess you take the award for being the best performing stock on the Dubai Stock Exchange last year with a performance of more than 100%, and 2024 more than 40%. What do you think is driving this re-rating of the stock?
Well, first of all, thank you for the nice introduction and for hosting me on the show. I think these are the results of 4 years of hard work, turning the company around, restructuring the capital of the company, restructuring the operations, and working hard to gain the trust of investors into our stock.
Yeah. And of course, this is a company that's been around for a long time. It's been listed since 2008 and has lived through the booms and the busts of the Dubai real estate cycle. Is there any nervousness that this multiple year of boom could come to an end?
Actually, the company has been listed for more than 30 years, since 1993, and we've seen many cycles and lived through many cycles. I think this cycle is a bit different in the sense that the Dubai market and UAE market in general has matured significantly. Today, the demand comes from all over the world. It comes on the foundation set of making Dubai and UAE a country that offers a high level of lifestyle, be it through economical growth or through safety, through the different amenities and lifestyles offered by the city. It's become a destination for a lot of people from all over the world to come and live and work and make a life for themselves.
Yeah, and you walk through Dubai, and one thing that strikes you is just there's still ongoing so much production, so much development going on in the property space. And some analysts have started to warn about the potential for oversupply. Can you walk us through your own project pipeline and how you see the demand, the future demand, being readily able to absorb all of the supply that's about to hit?
So as in properties, we've already launched around 4 billion dirhams worth of projects, and we have another 2 billion in design stage and the making to be launched this year as well. We see the demand as being solid. I think the years ahead, the challenge will not come from demand, but will come from supply chain management. We've seen some inflation in the cost of construction. I think the challenge forward is to manage costs and manage supply chain to be able to deliver on quality and value to our clients and real estate investors, and at the same time deliver profitability for our shareholders.
When you think about prices right now, they're up, say, more than 70% since 2019. Would you say that valuations are looking a little bit stretched right now in Dubai real estate?
I won't say so. At this time, if you look at cost of land, cost of construction, selling prices is not that high. I mean, the margins on the margins made by developers are not so huge, are not abnormal. They are still healthy margins. But at the current selling price, I don't think there is room for it to go lower without really affecting the supply coming in the market. I think the market is going to regulate itself over the coming 2 years just by the inflation in construction costs and inflation in land value experience. So this should be good for investors, because as supply comes down a bit, it will regulate with the demand.
And where do you see the biggest opportunities, just to round up the discussion? Is it in the luxury high end or in the more affordable sort of mass market units right now?
I think there are opportunities across the board at the moment. Today, I think the opportunity lies on where a developer can get land. Because again, the market has matured. Land availability in premium locations has become a bit limited. But there's also plenty of land on the outskirts and new areas like Dubai South. But again, we think today of the opportunities not just as residential. There are there are opportunities in the industrial sector and opportunities in the commercial sector as well, and the hospitality.
Yeah. Amer Khansaheb, so good to talk to you. Thank you so much for coming on the show. Union Property CEO, and you take a look at the stock. That was the best performing stock on the Dubai Exchange last year, up more than 106%, walking us through his outlook for this year. Well, for more of these stories looking into the intersection of wealth and power in the region, sign up for our Mideast Money newsletter on Bloomberg.com. And for a look at other stories we're following this morning, Saudi Arabian stocks have dropped to their lowest level since 2023 amid geopolitical tensions in Yemen, Iran, and Venezuela. The Tadawul All-Share Index dropped 1.8% on Sunday, the most since Trump's tariffs roiled global markets in April. The moves come as the kingdom called on Yemen's southern factions to enter into talks in Riyadh as clashes continued. The Tel Aviv Stock Exchange is set to shift its trading days to a Monday to Friday schedule starting next week as Israel seeks to boost its appeal to international investors. Swapping trading days will also boost the country's chances of joining the MSCI Europe Index. Until now, the mismatch in trading days ruled that out. And coming up, Ivory Coast signs a major health deal with the U.S., reigniting concerns about data privacy. We'll bring you that story next. This is Bloomberg. The U.S. has signed a health agreement with Ivory Coast worth more than $480 million. The deal is part of Washington's America First global health strategy that includes other countries like Kenya, Nigeria, and Uganda. While U.S. officials say the agreements will save millions of lives, critics warn it could raise concerns over data privacy. For more, Bloomberg's Andiro Ganga joins us now. So, Andiro, the signing of these deals, particularly with Kenya, was seen as a very big win for Washington. But back home, a court order has frozen that agreement. Talk us through the rationale and why.
Good morning, Jumana. So while pump and color was happening in Washington, where President William Ruto was signing this deal with the U.S., back at home, lobby groups had already gone to court. And in their petition to the court, the Consumer Federation of Kenya says that this is a deal that risks exposing Kenyans to privacy violations, stigma, misuse of their personal information, and also argues that there's a lot of opaqueness surrounding this deal and questions its constitutionality. And as a result, we saw the High Court pumping brakes on this $1.6 billion health arrangement that Kenya was first accelerating towards the U.S. And this pushback and laxity is not just in Kenya. We've seen 50 civil organizations write to different African governments asking them to slow down and also demand equity and also sovereignty while dealing with these African countries, particularly when they're signing these deals with the U.S. And it's not just Kenya. The deal is scattered in different parts. You have Nigeria, you have Uganda, Rwanda, Lesotho, Ivory Coast. And a part of this funding will go into malaria, TB, and HIV. And while we're seeing pushback on the continent, the U.S. is saying, no, there's nothing to be worried about. Actually, Africa is a willing participant, an active contributor, and this is a new age of partnership. But bearing in mind how critical healthcare is and the ambiguity surrounding Africa-U.S. relations, that's why we're seeing this hesitation.
And what are the key concerns being raised about the potential leverage this gives to the United States?
That's a really good question. It boils down to two things. It boils down to data, and also it boils down to the potential that African countries have. For example, it's being argued that the U.S. has everything to gain from this deal. It aligns health security with industrial competitiveness. On the other hand, for Africa, it just rather exposes them to structural dependence on the U.S., particularly when it comes to aid. There's also something to be said about the fact that Africa is trading a lot of their data, a part of their dignity, for very little. USAID was pulled under their rug, and USAID was offering way more than what this deal is offering. And so questions are being asked over whether Africa will be able to dance to the tune of the U.S. And when they're unable to do that, what then happens to budgets like healthcare? We saw when USAID was pulled, these are governments that were scrambling to look for money to fund HIV, malaria, TB, health systems collapsed, institutional memory collapsed. And so the question here is, if you're going to reintroduce aid models, we want to see structure and we want to see guarantees.
Thank you. Bloomberg's Nziro Oganga in Kigali, Rwanda. Well, we're wrapping up what has been a very busy show, talking through the implications of Venezuela and a look ahead to global markets, so far on a solid footing for the very first full trading day back in the office. That was it for Horizons Middle East and Africa. I'm Jemana Versace in Dubai.